Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and that you had a very beautiful weekend as well. And in today's action, well, there was a lot of action today. If you take a look at the sheer moves that occurred over the course of the pre-market session in to the early hours of the morning, they were quite substantial. And of course, it has everything to do with the war headlines coming out of Iran. Now, over the course of the weekend, obviously we know that President Trump issued a major threat to hit Iran's energy infrastructure if Iran did not open the Strait of Hormuz within the next 48 hours. That threat alone was enough to send the markets down in the pre-market today. Take a look at this. The S&P at one point was down 1.6% in the pre-market hours, and the QQQs were down in turn about 1.82%. There was a lot of damage that we were looking to face very early this morning. And then you got a God candle. Take a look at these massive volatility swings here, guys. From the bottom to the top on the NASDAQ futures, that's 4%, and on the S&P, almost as much, just about 3.95. So this came after President Trump very early this morning came out and said that 48-hour window of delay, actually, we're going to do 5 days more. And the market's responding instantly to that. You can see how fast they priced that news in. And then there was a lot of volatility all the way throughout the day, giving back roughly half of the moves that we started to open the market up with. But still, the question remains at the current time, with all of this volatility, with all of these mixed messaging headlines right now, is it a good opportunity to still buy the dip? Is it just another local lower high before a possible lower low, aka a dead cat bounce? Should we still just be cautious right now? Should we be selling everything? Well, of course, we're going to talk about everything in today's video. So, speaking about today's video, section number 1, we will once again recap the news events that happened throughout the weekend over into today's price action as well. And we're also going to present some statistics, a lot of which I showed yesterday in the top 5 options video. But just so you guys understand that even if today did not happen, if there was no delay, would it have been a good idea to buy the dip had the markets been bright red? And is it still a good opportunity to be buying the dip right now, just in terms of historical market events? So we'll take a look at those news events first. Then after, of course, we'll get into the technical analysis portion of the video, get into the charts, the S&P, the Qs, and other minor sectors. Check on the rotation and see whether we've stabilized some price action, because we know we came into last Friday, the big oversold conditions on the S&P, downtrends across the board on most major sectors. Did today's action repair any price action structure whatsoever? We'll have a look at that. After that, we will take a look at our big tech name list down here. You can see that they are all green. However, you may have expected a bit more, right? On a day like today, there were some nice moves, but nothing substantial. So even though they were green, we will once again derive, are there any good trading opportunities on these stocks? Are they still good long-term investments, or should we stay away? At the very end of the video, of course, we'll take a look at everybody's favorite section, the biggest gainers and losers of the day. Many names down big in the red section right here, several of which I'm very interested to be building positions in. And to the upside, many names as well. So we'll take a look at the biggest gainers and losers at the end of the video and wrap it all up. And that'll be it for today's video. So hopefully you guys are ready for another nice video, a fun action-packed one as per usual. Let's get right into it, shall we? So the S&P today up 1.05, the Qs up 1.02. But as we said, the move was much more substantial. We kind of just faded. You know, we came on to the highs about 11 a.m. this morning, and then kind of gave back roughly half of the move. Just this move from the top to where we close, guys, it's like 1% on the S&P, and a little bit more than that on the Qs, 1.25% almost, right? So very big intraday swings, suffice to say. Now, take a look at the heat map. It was a very broad market day of recovery because the macro headline was a very broad one, obviously, right? So on this list, a few names to the downside, namely Micron, all alone here, down 4.39%, but the rest of the market did very well. Big tech participating, the banks participating, healthcare, although weak, did participate to the upside, and the bottom half of the market, a lot of these interest rate sensitive names and inflation sensitive names as well, did respond well to that big piece of macro news that we got very early this morning. On the one-day relative, you can see the best performer of the day was basic materials. And there was a crazy swing in gold, guys. I've rarely ever seen such a massive swing in gold. I mean, just in the past 4 days, from where we kind of, I mean, you can tell when the price action changed, right? It was soft, and then we got this big acceleration to the downside. Just from that moment of acceleration, that's an 18% move on gold in 4 days, on top of a pre-established sell-off from the top, right? Top to bottom, it's about 24%. But look at the swing on the gold market today, guys. From the start of the futures session to the lows, that was a 9% move on gold. And then obviously when we got that piece of news this morning, the gold market recovered, many basic materials recovered as well. And as a result, your basic materials ended up being the best performers of the day, followed closely by consumer cyclicals, which are very sensitive to any changes in predictions about the interest rates and the degree of inflation that you may face. And technology was number 3. Healthcare, the weakest. On the 1 week relative, well, still, even after this nice 1 day's worth of bounce, energy remains the only sector still in positive territory. Now, energy stocks, some of them went down today, but a lot of them still held up their gains fairly well. A lot of the oil and gas companies not coming down too much, and that is in spite of oil having a big red day, guys, down about 10% top to bottom after that news was released as well. So not too bad of a day's performance in terms of market breadth. But once again, the question remains, is it just a lower high? AKA, is it just a bull trap for further downside, dead cat bounce in terms of further downside? Or do the bulls have a chance here to change this trend around, set the weekly lows, and end the destruction that has been happening in the markets ever since this war started? Well, let's get a sense of where we are in the headlines, and then let's get a sense of outside of the headlines, would it be a good opportunity to buy? If you had no idea why the market was dropping right now, and we're just trading things purely based on technical analysis and also market breadth conditions, daily oversold conditions, etc., would it be a good condition to buy? Although carefully, still buy, right? So let's move into the news headlines right now. Number 1, just to recap some events that happened over the course of the weekend. President Trump on Friday saying, I don't want to do a ceasefire with Iran. Friday after the close saying, considering winding down the war with Iran when he was talking to reporters. This was Saturday. Axios reporting Trump is planning peace talks, and then later that day, Saturday evening, if Iran doesn't open the Strait of Hormuz within 48 hours, the U.S. will obliterate Iran's power plants. So that was the big news headline, and obviously Iran responding in tandem, saying, listen, if you do that, well, we're going to completely close the Strait of Hormuz. They will hit vital infrastructure in the Middle East. It includes energy, IT, and water desalination facilities across nations such as Oman, Saudi Arabia, right, and things of that nature. Iran's senior military commander saying the country's military strategy shifting from defense to offense, and the country also saying they have enough reserves of essential goods to last up for 1 year, basically reiterating the fact that they're not going for military supremacy here. No, they're going for a war of attrition, right? Essentially, bleed the enemy for so long and with, incremental ballistic missile fire and drone fire that the global economy suffers, and that the Western nations are forced to pull back as a result. Now, after this was said, this is the big news headline this morning, Trump saying he's postponing attacks on Iran power plants, citing productive talks to end the war. And there's a lot of speculation around who were these productive talks with, and did they actually happen? Because later, beyond that, Iran saying that there had been no direct talks, and that Trump's move was designed to lower energy prices and buy time for his military plans. So those are a bit up in the air this morning when Iran talked about this, right? So the markets responded on that big news candle this morning, very, very massive candle. And then when Iran came out and said, no, we haven't really talked to President Trump at all, then you started to sow the seeds of doubt in the market's mind. But thereafter, we did get one piece of news which kind of did indicate that there were indeed some peace talks happening behind the scenes right here. This one too, Pakistan steps up as they go between in Trump's Iran crisis. Now, 2 officials familiar with the discussions said that Pakistan had pitched Islamabad as a possible venue for talks as early as this week involving senior figures from Trump administration and Iran. The Pakistani prime minister held talks with the Iranian president on Monday. The conversation between the Pakistani and Iranian leaders came right around the time that Trump announced that he was delaying his threat to obliterate Iran's power plants after very good and productive conversations with Tehran to end the war. So this piece of news right here, coming from a third party, namely Pakistan, did help kind of bolster the claims that there was indeed peace talks happening behind the scenes. Now, moving on later, President Trump saying that his envoys, Steve Witkoff and Jared Kushner, had spoken with a senior Iranian official with potential deal terms emerging, per Axios again. On the potential deal terms, you would have Iran committing not to pursue nuclear weapons or to enrich uranium and to hand over its existing stockpiles. Iran also agreeing to be low-key on the missiles, whatever that means. Iran also agreeing to reopen the Strait of Hormuz, and if they carry through with that, it will end the conflict. They want to make a deal. We want to make a deal too. If this happens, it's a great start for Iran to build itself back. So a big old game of he said, she said with a third-party confirmation, which is why the markets had a pretty good day, but also weren't able to keep up most of the move into the rest of the market close. Now, you guys know me already, right? In terms of the Iran conflict, it's very simple, right? If you want absolute final resolution, there can be no speculation. Either one or two things is going to happen. Either we are going to get a ceasefire and it'll be officially confirmed by both parties, or you'll start to see ships going through the Strait of Hormuz, none of which have happened right now. So as of right now, still speculation. It was a very nice candle today, but we're not in the business of playing speculation right here. No, we're in the business of trying to ascertain whether or not, even in spite of this conflict right now, is it a good time to buy? Because many of you have possibly been holding off on the buying power, waiting for some sort of a catalyst such as this one, right? The beginning of peace talks. I will remind you, normally, the markets will bottom before the conflict is actually over. The markets are a forward-looking mechanism. They price in the worst-case scenario immediately and quickly, and then work their way backwards from there. So statistically, if we just look at a few different things, guys, let's have a look at whether or not it's a good time to be buying. Well, here's where we are right now. We're about trading day number 15, and around over 30 major geopolitical events since 1939. As events in the Middle East get more worrying, we're approaching the usual bottom in terms of timing. Will this time be the same or different? So obviously, these are median moves and average moves. We are into day number 15 of the conflict, and if you measure 30 major geopolitical events, suffice to say that usually between weeks 2 and 3, you get the bottoming out process of the market. Now, there's obviously different interpretations of this one, but the biggest interpretation would be that the market in that 2-3 weeks worth of time is able to price in the worst case scenarios and adjust to the pricing mechanisms at play. And also people will have already established their positioning one way or another, right? That's why the market can price in efficient information such as that, right? So this is catalyst number one. One piece of statistical analysis that would tell you it's a decent time to be buying right now. Maybe not full in, right? Or rather all in, but still, should we be nibbling or should we just be crossing our arms saying, no, I don't want to participate. This is too much for me. No. Historical precedents tell us that we should be buying. Number 2, daily sentiment index. As you guys know, right? Down here at a low read of 22. Usually when it comes down here, is it a good time to start the nibbling? Absolutely. Doesn't mean that it's the bottom. It just means that we have indications that it could be a very good time to go shopping for your favorite high quality compounding companies that largely should have nothing to do with the entire situation in Iran. Moving on further here, the S&P 500 forward PE ratio now down to a 19.5. That is under your 5-year average of 20 and slightly above the 10-year average of 19. The last time it came down here was in the great tariff situation of 2025. And we know as well that was a good buying opportunity. So what we're trying to get here is clues from geopolitical events, clues also from sentiment elements, and now also clues from valuation elements. So there's a lot of statistics that'll come from oversold conditions, valuation, and historical facts, right? We're trying to get confluence here. Moving on further, CNN Fear and Greed Index. By the way, that one is still at a very low print of 16 over the course of the day today. But historically, usually when we come down into these locations, is it a good time to be buying? Yes. Can it go lower? Of course it can go lower, right? But are we in the current environment where now would be the time to start nibbling at your favorite companies, or at least putting on different trading strategies, such as selling puts well below the market while the volatility is high? Is it a good regime to be doing that right now? Yes. Moving on further here, 4 P ratios. I apologize, this one's very small. You will need to use your binoculars for this one. The 4 P ratios of the technology sector at a very low 20.5. Forward price to earnings. If this is a market bubble, this is like one of the worst bubbles that I've ever seen, right? The 2001.com bubble would be deeply disappointed about the valuations right now, claiming that it's a bubble, right? Moving on further here. Are we in a bubble still? Valuations in the dot-com bubble versus today. Take a look at these valuations here on a forward basis. Microsoft at 21, Apple at 28, NVIDIA at 21, which is ridiculous, and Google at 26. Compare that to some of the valuations in the dot-com bubble. Once again, the dot-com bubble is probably rolling in its grave right now, disappointed at how terrible this current bubble actually is. This is not a bubble, right? It's a shadow of a bubble, perhaps, is what they would be saying. But I mean, obviously, I'm being very sarcastic right now, guys, but just to tell you, right, it was a completely different environment. I mean, the NASDAQ, guys, back in the day was at a P ratio trading over 100. Definitely not the same environment right now. Moving on a little bit further, total put to call ratio still very elevated right now as people continue to flock to buying protection, even in a high VIX environment, which we know is never a good proposition. You want to be on the other side of that, meaning you want to be the person selling the insurance to everybody that's panicking right now. Normally, when the put to call ratio gets this high, does it mean you're absolutely at the bottom? No, but it often means that you're in a bottoming out process. Can we drop a little bit further on the S&P and the Qs? Yes, but has most of the move already been done on the indexes and some of your individual names? There is a good likelihood that that is indeed the case. Moving on a little bit further here, this one no, but this one yes. Just to remind you guys, every single year there's something. Every single year. From now all the way back to 2009, and I mean, there's not enough room on this page, but you can probably go back all the way to the 1970s. Every single year, the market will give you a reason to sell your stocks. Some more serious than others, but every single time, the news outlets and the media, and obviously people's popular opinions, will lead you to believe that this is it. This is the one that'll lead to a 50% drop in the indexes. Now, obviously, that's a exaggeration. However, right, the market will always give you reasons to sell your securities. It's up to you to be able to see onto the other side. Being cautiously optimistic is the name of the game right now, and being very careful in the way that we position in the current market environment. But suffice to say, should we be positioning? Most likely so. And last but not least, volatility is the toll that we pay to invest. S&P 500, various declines per year from 1928 to 2025. Every year, you get about 3.5%, 5% mild corrections, which is exactly what we're in right now. Now, if the S&P would have opened up and the Qs minus 2% this morning, it would have put you over 10% drawdowns. If it wasn't for that piece of news that President Trump was delaying the attack by 5 days pending negotiations, you would have been in your 10% correction, and you usually get one of those per year, especially in midterm election years. Very common to get a 10 to 15% correction. And thereafter, obviously, you don't get that many at all, right? So you want to be taking advantage of these dips. They happen quite frequently for a variety of different reasons. So you want to be taking advantage of them. But how? Well, probably in the same way that the Fed basically gave you the hint last week, right? The Fed basically saying that GDP outlook for this year, 2027, 2028, still looking very strong. The unemployment rate projections also looking very strong. Full employment, in other words. PCE inflation, however, this may be somewhat problematic, but it's obviously in the very short term. And when I say short term, I don't mean the next week. I mean 6 months or less, right? And obviously, your interest rate cuts have been tapered back now. The expectations for an interest rate cut stand between 0 to 1. That's the analyst consensus right now. And even into 2027, the interest rate cuts still span from 0 to 1. And previously, the markets were pricing in like 2, right? At least 2 for this year. The war in Iran and the possible impacts on inflation are the main reasons why your rate cut odds have been pushed back and why your inflation projections have been kicked up higher. So in the short term, is it okay to be cautiously optimistic and bid stocks in a very careful fashion, but still be bidding? Yes, but in the long term, should we be bearish this market with these projections out to next year? Probably not, which goes to reiterate the point that we talk about many times on a per week basis, right? If you take a look at the bearish narratives right now, you're in a situation where you have everything in the kitchen sink, namely Iran driving all the volatility right now, but still many various bearish narratives at play. But you remember I read you that memo from Goldman Sachs last week? It is very tough, guys, to be bearish on the medium to long term. So any buys made today should be with the medium to long-term bullish tailwind view, right? If you're a long-term investor, you should be taking advantage of these discounts. If you're trading the markets, you should be trading the markets very carefully and possibly using, possibly selling options as your favorite vehicle because the premiums are very good right now. We can get some strikes that are significantly below the current market prices. That is everything for your news recaps, your statistical analysis recap, and some conclusions as to what you are able to do, depending if you are a long-term investor or whether you are trading the markets. With that out of the way, let's get into the juicy stuff. Let's get into some charts and see what we can determine after today's bounce. So on the good old S&P, as you can see right here, we have not repaired any price action structure whatsoever. Yes, we got a very nice gap up open this morning and held most of that gap, but we are still in the context of this daily downtrend. If you are looking to be more of a prudent trader or a more prudent investor, you may be of the opinion that it's more safe to wait because we know that under the 200-day EMA, things get very volatile sometimes. You can indeed wait until you have better price action repairs, which may even come with a confirmation of the peace talks being underway, right? However, for that certainty, you will definitely sacrifice price, meaning that there's a chance that if we get the daily market uptrend right here, well, maybe you're going to have to get in a little bit higher than we are right now. That is the price that you have to pay sometimes for certainty. That being said, the price action as of right now, the bears are still in control. And if you do drop, you're looking at the line in the sand level below, 645, and probably a location that the bulls may find some decent support down here would be 641 to 633. If we give this entire move back and plummet over the course of this week, I will remind you, the S&P will once again be in a situation where it will be in oversold conditions. Usually a very good time to be building some positions overall. On top of that, the market breadth should be another indicator that you are closely watching. You'll see here that we got a very nice pop on percentage of stocks above their 20-day EMAs. We got a pop, but we're still very, very low in the grand scheme of this print, right? Really low. Can it drop lower? Of course it can, but are we in an environment where we should be looking for buys or at least building a shopping list? Absolutely. On the percentage of stocks above their 50-day EMA. Today, a little bit of price action repair in terms of market breadth, but not much. Still at a very low read of 27% of stocks only above their 50-day EMA. I can go back, guys, 15, 20 years. When we're down here, is a good time to be buying? Yes, but carefully and on your favorite highest quality stocks in the market, because on the other side of this, the highest quality stocks are usually the first to recover. Moving on to the percentage of stocks above their 200-day EMA, also at a very low 46. Can this one drop lower? Absolutely. It has the room, right? However, we did put a lot of distance between us and the 200-day EMAs on many different industries within the context of the S&P and the overall market, so expect this one to fall a little bit slower. That being said, the shorter-term EMAs should be your guide, and we are oversold on the breadth. We are very close to being oversold again on the S&P. So today is a nice position. If you were selling put options on Friday, today was a great day to do what we've been saying on the channel, right? You get in when you have very big volatility expansion days, very big red days, you get a nice little pop, exit the positions, rinse and repeat, right? If you're trading directionally, well, you got to play some of the names that have favorable price action. And those names, we talk about them many times at the end of the videos, and we'll talk about them later on in this video as well. So that being said, the S&P, I'm not going to sit here, guys, and say I have a crystal ball. You have to follow the price action until you get a daily uptrend structure repair. The bears still remain in full control. It's up to the bulls to prove to us, right, they want to play some defense and reestablish a daily uptrend, something that we have not had in approximately over a month at this point in time. On to the QQQs, same analysis. Daily downtrend and the bears still in control, closing slightly above the 200-day EMA. Not quite oversold, though, not as much as the SPY. Next stop to the downside is exactly where we bounced off of up Friday. 581 down to about 575 is your next stop. The bears still in short-term control. Once again, it is up to the bulls to prove it to us that they can repair some structure. We're looking for price action structure repair here in terms of a new daily uptrend to allow us to put on size and allow us to put on directional trades that have a higher probability of being a follow-through, instead of just guessing that, yes, yesterday was the bottom, going long from here and just being unwound again, right? You got to wait for the uptrend if you want to put trades on with a bit more size. So keep that in mind, especially since many of the big tech names, although they had some bounces, a lot of them are still in daily, weekly downtrends as well. We'll talk about that later. Moving on to financials right now. Nice little bounce, but you can see closing at the lows of the day. Financials still a little bit soft right now, and because the bears are still in full control of this short-term trend, right? So lower stop below us is roughly 48 down to about 46. That being said, it's a nice area of price action structure from previously. This index, top to bottom right now, was down about 14%. Financials, still a very decent bet in my opinion. Many very attractive stocks right now at their lows. Visa, still at the lows. MasterCard, still at the lows. Bank of America sold off into a big area of support as well. And even something like American Express, right? Sold off significantly from the all-time highs here, over 20%. Decent proposition, especially finding it around that monthly 26 EMA, and a very fair valuation in my opinion. So financials, still a sector that I'm interested in playing, nibbling some of these long-term companies that I'm holding in my long-term portfolio, so keep that in mind. It's just that for short-term swing trades, you're not going to get much lift until the bulls give us a daily uptrend, something we have not had, guys, in over a month at this point, right? That's the same across many different sectors here. Healthcare is a bit of the same, right? Daily downtrend, still very weak, and we're coming very close to breaching our support level, 148 down to 145. You can see they're closing trying to close below it, although in oversold conditions. This one needs a bounce soon. They had a bit of a bounce this morning and gave it all back, closing at the low of the day. So the bears are in full control of this one right now, coming down way too hard. You might remember there was a time where I would have been interested. If you come down soft into this location, great. I am definitely going to bid, but come down this hard with macro this way, right? And the overall indexes just not being supportive of directional trades for longs until we get some price action repair for daily uptrend. Well, no bids for me just yet. I'd rather wait for the confirmation. Now, the next stop below is a huge area, would be 140 down to 132. So we will see. If you come down there while being in oversold conditions, that's probably going to be an area that's going to trigger a big bounce. Although we could see the bulls make the attempt from here. Still, we have to wait for the price action, which is why I say don't guess, don't speculate, just wait for the price action to show you. And if it means we have to have more confirmation on these Iran deal or peace negotiation talks, maybe that's just what it takes for most of you to get interested in these markets, and I would not blame you. Moving on to SMH right now, SMH still very choppy. The daily bears, right, trying to reestablish some lower highs and go for the downwards break. If that does happen, we're coming down below here, 375 to 367. You want to see the uptrend break, you really got to break above 400. Give me a nice clean break above 400, sit on it and change the uptrend. And then we can finally say, look, the weekly lows are probably established, because if not, a very good chance here of coming down here, weekly downtrend, joining Team Bear. Many sectors are in weekly downtrends right now, or at least heavy periods of weekly consolidation. And if it does move a bit lower here, guys, well, the max pain location is probably sitting close to the 12 EMA, around 345. So semiconductors still your market lead bull right now, but they're all not participating the same, right? Several very strong companies are significantly off their all-time highs. Talking about Broadcom, super solid, well off the all-time highs. NVIDIA, solid, well off the all-time highs. And AMD as well. Very solid name, of course. Very good thesis for the long term, but still significantly off the all-time highs. And you can see many of these names, they bounced. They just didn't hold up the bounce, did they, right? So moving now into the Russell, 2.16% to the upside, your best performing segment of the market today were some small caps. That being said here, guys, right? Is there anything that has changed today? No, not really. Daily downtrend is still in motion right now. As you can see, nice engulfing move. The bulls have some space now to change the trend, but will they? That's the big question. If not, you're coming right back down here to these lows, 240 down about 237, which would be a beautiful period of consolidation down here into the monthly 12 EMA. So we're still looking for the bulls to play some defense on these monthly higher lows. You guys know me. I am still positioned in growth stocks. I'm just not playing the IWM specifically. I'm playing individual names, many of which we've described on the channel so far, but we'll do a quick little recap towards the end of the video. But growth stocks, not a bad day, but you still got to change that trend for me. And now moving into some of the other sectors right here, consumer staples still being bogged down by the threat of higher inflation for longer and higher interest rates for longer. That being said, another segment of the S&P into oversold conditions. And this one too, it just came way too hot in this area, guys. So I'm not going to participate yet in consumer staples. However, if we see the daily uptrend shift, right, that was a big monthly move and two huge monthly candle closes. So if they try to change the trend for us, right, maybe you'll see me participate, but as of right now, no action from me. Still soft because of inflation and interest rates. Consumer retail, same concept, right? Big downswing right here. And this one as well, coming out of oversold conditions. Many segments of the SPY into oversold conditions, right? Weekly downtrend, monthly big downswing into the same area that's been holding us for the past year and a half, which is 79 down to 73. So I'm still not playing consumer discretionary stocks. I think the consumer is still too much of a wild card X factor right here, right? So I'm not playing the restaurant stocks, not playing the clothing brands, not playing much that's directly exposed to consumer spending, except for travel. I am still a fan of bidding my favorite travel stocks, which include things like Airbnb and to a certain extent Uber as well, and especially Booking.com, which is a nice position in my long-term portfolio because a lot of these are at very fair valuations, but I'm not really playing many of the other discretionary items. On to utilities right now. Utilities coming down in a huge way on Friday, man. This was a massive candle down, unfortunately breaking the structure now, and unfortunately still in a weekly downtrend, right? So they had a nice movement going right there. Friday's action was just too strong, couldn't hold the highs, and now sadly you just unwound this and into as well monthly consolidation. Now utilities is not something that I'm playing sector wide. I'm kind of picking apart the ones that I do want to play. You guys know me, Vistra and NextEra Energy are probably my two favorite utilities players for the next few years if I'm looking to take advantage of the data center energy requirements. Moving on to real estate right now. Well, obviously, real estate's not going to do too well because why? Well, you got the 10-year yield right now very high, almost back to 4.5. It's 4.34, but who's counting? Very close to 4.5. And the US 20-year yields as well, all the way back up to 5%. So once again, mortgages and things like that, refinancing rates very high, and unfortunately, real estate just not very favorable at all. And that's the same for some of the mortgage companies. Rocket Mortgage, decent down here. I might be playing it shortly. And the home builders were looking so good, but unfortunately, with this entire Iran situation, higher rates for longer and still more pressures on the consumer, just not able to convert this into the monthly uptrend and continue with good consistency. So unfortunately, this trade now is kind of a bit dead in the water. You're going to need to see some significant price action repair if you want to see me position a little bit more. As of right now, I'm just kind of letting it go. And lastly, energy stocks. I mean, they started off very big consolidation on the day, right? But closed at the high of the day. So recovering a lot of that move overall. Daily oscillating between overbought conditions and not, but it's a beautiful uptrend, right? So if you're going for follow through, the markets just gave you a stop loss territory. That would be below the lows of today. It's a very greedy trade because you know on the weekly, it's very extended right now. Monthly is just pushing. So not recommended to everybody. I mean, none of this is a recommendation or financial advice, by the way, but if I were looking to swing trade this one, I mean, the markets gave you a pretty clear stop loss location below today's lows, and you'd just be looking to carry this trade higher until you would lose this daily uptrend, right? Because as soon as you lose the daily uptrend like this, lower lows, right? Well, that's when you're going for the larger weekly consolidation and possibly even the monthly consolidation as well. But you know the risks, right? The risks, you saw them this morning. The risks to this trade is, well, exactly the opposite risks to the rest of the market, right? The risks is the peace talks to this trade, and that will cascade you lower, and that will be the end of that trade. So make sure you're watching out for those headlines. It's a very headline-driven trade right now. The VIX, what a wild day on the VIX, man. You know, it moved all the way down to about 20 intra-session, and then look at this wild move in the pre-market, right? From all the way to 30 down to 20 and then settling somewhere in the middle. So very nice environment right now for selling options, selling covered calls on some of your profitable positions, if that's something you want to do, or selling put options under the market to potentially either farm premium or maybe acquire new positions, right? As you know, selling put options is basically just a buy limit order under the market that pays you either way, whether you get assigned or not, you still get the premium. So one of my favorite things to do right now in this market is to sell premiums right now with a very high VIX. And now moving on to some of the other names, such as the metals trade. So gold, what a massive move on gold. We talked about it in the introduction, right? Gold, oversold conditions. Been a while, hasn't it, that gold's gotten oversold conditions? The last time was in 2023. So it can get more oversold than it currently is, but we did one thing here. You tagged the 200-day EMA, something that we have not done, guys. Also, since October of 2023, big liquidation break, smashing through multiple levels at the exact same time. You smashed through the last level that we had back here, right? Closing, or not closing, but the weekly is still trading below the 26 EMA. This hasn't happened in a very long time. So obviously you can tell you're into monthly consolidation. And this is exactly what I was saying. We were trying to go for some swing trade longs here, and we were saying, pay attention, put a stop loss down below here, because if you lose this level and you lose all the moving averages, something you haven't done in months and months and months and months, something is different, and it can lead to larger monthly consolidation. And look at that. Monthly consolidation is exactly what you got, coming very close to the 12 monthly EMA, which consequently is also the 200 daily moving average. So gold, you're going to need some good price action repair of the structure to get me interested in this trade again. As of right now, the larger time frame bears are definitely in control of this trade, and we're currently slightly below the area of previous support that I've labeled now as resistance on the chart. And silver is largely the same concept, coming down into its 200-day EMA. Silver, I mean, cut in half, right? 120 down to 60. There was a time where everybody was talking about silver. I haven't heard anybody talk about silver recently. It's kind of funny how that works. All of these parabolic moves always end in the same fashion. It doesn't mean that this is the end. It could very much slowly move higher, but these parabolic moves, when you're up here and everybody's telling you, yeah, it's going to $300, not in a straight line, it's not, right? So big drawdowns right now on silver. Bears clearly in daily downtrend control right now, and I will have to wait for a bit better price action structure if you want to see me reposition and make an attempt at the daily trend reversal. At this point, you need a weekly trend reversal because it's a weekly downtrend. That hasn't happened, guys, in how long? What, since like last April? we didn't even have a weekly downtrend back then. The true downtrend was late 2024. This is now a new one. So the regime has changed. And now you got a big candle of monthly consolidation. So we will see how long it lasts, but definitely doing a good job cooling off the monthly RSI on silver and cooling off the monthly RSI on gold as well. That was always the thing that should have got you a little bit hesitant as to trading with size, but especially you had to trade this with a stop loss, guys. If you got trapped, it is what it is, right? But just use that as an example for the future. On a Bitcoin right now, Bitcoin up 4.5% on the day, but let's be honest, not doing anything, right? So the bull's still in control of some daily uptrends right here, trying to establish some higher lows. Line in the sand is now there, 67.7. You lose that daily downtrend, and once again, you run the risk of this just being a lower high, lower low flush for potential drawdowns here to 60 to about 55,000. Bitcoin and crypto is just so soft right now. Yes, it's into the 200-week EMA, but there's no bounces. And when there are bounces, there's just no follow through, right? So that being said, we're still stuck in this location. You need to get a weekly candle break at this point above 75 to get me interested. And even Ethereum, same concept, right? We're doing nothing. The daily bulls are, yes, in control of this chart, but you unwind here and flush these lows, 22,000, right? Daily downtrend again, and sadly just a weekly bear flag, right? Weekly bear flag and two possible lower lows, the extent of which should come down 1760 to about 1284. So that being said, guys, if you want to see me participate more in crypto, you're going to have to give me more bullish price action than this. Because at this point, I'm not interested in small little daily upswings like this. No, I want to get a better sense of whether or not the bulls can give me a nice bounce, change the weekly uptrend, and then we could talk about this maybe being some of the cycle lows for crypto. As of right now, nothing that indicates that truly. That's it for our market analysis rundown. Let's move into big tech. All right, we're going to go through these quickly because not much has changed, guys. In terms of saying not much has changed, you don't have any price action structure shifts, right? Still a daily downtrend on Apple. At the current time, nice engulfing move of the most recent move of selling. Need to see the conversion here into an uptrend if you want to get me interested in any swing trades. Until that time, still a weekly downtrend into support. Yes, 256 down to 246. I'd be interested in Apple if we get a little bit more sell-offs. You guys know me, probably selling put options down here. And this would probably be the nice area that I'm looking to maybe nibble a little bit of shares of Apple between the 12 and 26. Between 250 and probably 230 would be an area where I would not mind adding a tiny little bit of shares. It's not going to be my biggest add for my long-term portfolio, but a tiny bit. I haven't bought some Apple shares in a long time. Not, probably since those lows, right? I'm just looking to play the monthly swings right now. Apple's trying to find a local bottom. Not looking too bad, but however, the stock still is expensive, so not the best buy in the market right now. But still, structure is not terrible. Moving on to AMD right now, only up 0.67%. At one point, AMD was up over 3.5% today before giving it back. Still very choppy price action, guys. No clear direction. Trapped between two levels, 216, 230 resistance, and below support, 190 down to 175. You guys know the drill, right? Come down hard into here. I'm selling put options in the 180 to 170 pocket all the way down there. And even in the sub 200 range, surrounding the 190 to the same location, 170, will be a nice area to add. You're going for the OpenAI gap fill in the event that they do. The reason I like adding this one to the long term at these prices and lower are exactly because the fundamentals are very cheap right now. 0.82 peg for all of this growth. Revenue EPS growth is very solid. And also, at the same time, you got some really nice EPS growth coming and some really nice revenue growth as well. So short-term swing trades, no, there's no very bullish price action right now. You're still waiting for the bulls to do something and change the trend and get out of this monthly consolidation. For the time being, though, nice accumulation range down here. Moving on to Amazon. Amazon, same concept, 2.32% to the upside, but no trend change. Still in the context of a daily downtrend. If they start moving a bit lower into today's action, we erase some of today's move. Same concept. My favorite way of playing this one of two ways, either accumulating shares for the long-term portfolio just based off of valuation alone. Amazon currently trading around a 27 for PE and a 1.35 peg with phenomenal earnings. And if you move towards these lows, very simple, you'll find me selling put options down here around the 193. So common themes across many of these names, guys. There's been no price action changes. The bears are still arguably in short-term control, still in big weekly or monthly consolidation phases on a lot of these stocks. So longer-term form trades are in effect, such as lead call contracts if you're interested, or accumulations for some longer-term shares. It's just short-term swing trades, not for me just yet. I need to see some better price action. On to Google, same concept on Google, although I'm not really buying Google up here. The bears still in short-term control, right? A new daily downtrend. Line in the sand, guys, it's like 295, right? You lose 295, where are you going? you're just going to continue this weekly downtrend a little bit more into possibly where the larger phase of monthly consolidation, just like gold, just like anything that has a parabolic move like this, eventually you do consolidate. Longer term buys, I'm probably going to hold off until we hit this 275 pocket right there. And overall at 300, Google is not a terrible buy. It's just not the best buy in the market. It's trading at 426 forward PE for 2026, which is not bad, at a 1.75 peg. So it is a little high, especially in relation to some other names on this list, which is why I'm not really doing anything on Google right now. No swing trades, no leap call options, not good enough value for me. There are better bets in the market right now, but I'm not selling any of my long-term shares. I'm just not doing anything right now on Google, to be honest with you. Solid company, not selling any shares though. Moving on to Meta. Meta also, daily bears in control of this chart right now. Not quite oversold conditions, but very close, coming into the big area of support, 605 to about 560. It was up almost 2% on the day. Decent, but gotta give me the daily uptrend, man. On so many of these names, you'll notice, right? Unless you have a daily uptrend with nice structure, it's tough to take swing trades on these names and call this absolute bottom. So the best we can do is focus on the valuation, right? For longer term investing purposes. Buying Meta down here at around 600, great pop position, very close to a 20 forward multiple and a 1.1 peg. Arguably one of the best deals in the market for a company that generates substantial margins on a yearly basis. That being said, price action is just very messy right now. This chart is just super messy, but I'm a big fan of adding in this area and also selling puts below the market too at these valuations. Moving on to Microsoft. Microsoft, I mean, not doing much of anything, right? But then again, neither is the entire software segment, right? Software was up decently today, but there were so many names that were doing nothing, like CRM. The whole market was up today, they're doing nothing. Adobe, whole market was up, they're doing nothing. So unfortunately, IGV, and namely Microsoft, which is one of the heaviest weights in there, not doing too much. And it's at the bottom, guys. I mean, we're holding on by a thread here in terms of support, right? It ends at 380. You breach that, you have a very good chance of coming all the way down here to 350. You are now below the 200 weekly moving average, which rarely ever happens. I mean, it's happened once in the past 15 years on Microsoft, arguably, right? So keep that in mind. That being said, short-term swing trades on Microsoft, I think you guys know my answer, right? No, the daily bears are in control right now. The weekly bears are still clearly in control. The bulls had a chance to bounce, got a very soft bounce out there, so maybe you need to find more buyers at a lower price. The best thing we can do, knowing that it's deeply not deeply, but it's deeply oversold right now, weekly oversold conditions that almost never happens on Microsoft. The valuation as well is very fair, around 390 or less. It's a 23 forward PE and a 1.28 peg. The valuation is very compelling for accumulating some shares or selling some put options below the market. Onto Netflix. Netflix, I mean, decent day, 1.7%, but same concept. Daily bears in control. Move a little bit lower. You might be going for the Warner Brothers gap fill down there, right? 86 would probably be the next stop, challenging the moving averages on the daily right now. The weekly, I mean, it was a very nice bounce. This is a very nice bounce. So it's going to be very hard for the bears to full flush this. If anything, we're probably just looking for a higher low and maybe for the actual trend change, right? No trend change as of yet. So still longer term investments into Netflix, if it's your style of company, at 90 or lower, not bad, right? 28 forward price to earnings, but you're getting a lot of EPS growth, 1.43 peg. Not the best deal in the market, but fair in my opinion. I will be buying more shares of Netflix. You guys know me. Between 90 and 80 is usually the area that I have been adding to somewhat more aggressively. And I will be doing so again if it drops under there too. Moving on to NVIDIA right now. NVIDIA 1.7% to the upside, but no change in structure, right? Still, the bears in control, short term, below resistance right now, 185 to about 178. Now you're once again back in the gulag, trapped between resistance and the beautiful support level below us, which is roughly 170 down to 164. So very tough to go for swing trade longs on NVIDIA right now without, it's much easier to take things when you have a nice breakout. You can confirm a stop loss area, you go for the breakout, then you try to get the price action appreciation, right? When it's just in a big chop zone like this, the best we can do is longer term format trades. If you like the valuation, right, there's only two possible things you can consider. Either leap call options, not a recommendation. I'm just saying, what are the two possible trades right now that you don't have short-term price action, at least not confirmation? If you guys want to speculate and say, this is the bottom, I'm just going for it. I mean, it's up to you, right? I'm the type of person that likes to wait for confirmation on my price action before doing those types of trades, like shorter duration call options or things like that. But I mean, at this valuation at 175, very fair, almost a 24 price to earnings. under a 1 peg. Beautiful increases in guidance as well. So long-term shares for me, and I also do have leaps. Moving on to Tesla right now. Tesla, nice bounce today, but still a little bit too late, right, for Tesla right now because they're now under the area of resistance. 406 down to 382 was support for a very long time. Sadly, you lost it. You lost the 200-day EMA as well, and the daily bears are in control. So until you can prove it to me and get above this level and get the daily uptrend back, the bears will remain in control until we find our bottom. And the only way you know it's the bottom is when you actually reverse the trend, right? It's been a downtrend for how long right now? For a better part of the last 3 months at this point in time. So no change in trend, no short-term swings for me, still in weekly consolidation, still in monthly consolidation too. Your next stop, as I said, 361, 340 to the downside, which would be the 26 monthly EMA. On to Palantir. See, this one is different. What do you notice that's different of this chart and everything else we've looked at? Well, one thing that should stand out to you is the ability of the bulls to structure a nice daily uptrend. And even though it was in a big weekly consolidation phase, right, you actually got a nice bounce underway and the bulls are following through. So this one has favorable price action, right? Higher lows are right here, 148. And your next stop, if we go higher, 170 up to about 185, is that big box of price action all the way up there. So Palantir, not looking too bad. Has always been one of my favorite companies in the market. Sometimes I didn't agree so much with the stock price, such as up here, right? But we were saying, especially after their earnings, down there was a very fair location. And I had not added to my Palantir position in a very long time. And I did take advantage of these discounts to add to it again. So pay attention to how the price action continues. If they just give this entire move back for some reason, well, we're going to reevaluate whether the bulls can hold this one 148 to 140 and just put in some weekly higher lows, maybe a bit of chop consolidation, right? Try to change the weekly uptrend because right now they don't have it as of yet. Moving on a little bit further here to SOFI. SOFI, this chart as well is just, this is a very ugly chart, right? Daily bears in full control, downtrend riding this 12 EMA to the downside, unfortunately. Daily, still oversold conditions. I mean, you could argue that, you know, you have a bit of bullish divergence right here, and that would indeed be true, but SOFI is going to be beholden to the performance of the rest of the financials industry, right? If financials can't catch and sustain a bid, unfortunately, neither will SOFI, and so many fintech stocks have been out of favor. This one's been out of favor. Robinhood's been out of favor, right? And so many more. I mean, we don't even have to talk about all of them, the banks, the credit card companies, et cetera, et cetera, et cetera. So if Visa and MasterCard can't change trends and the banks can't change trends, SOFI is not going to change the trend, guys. It's just going down with the sector right now. Weekly, almost oversold conditions as well into the box. 17 down about 14, which would be a nice location to build some positions. All I'm doing down here is selling some short put options under the market right now. Pretty good premium. And down below here at about 17 bucks, you got a, well, let me just redo it for you because I keep saying I'm going to redo it and then it just never, I just forget. Sorry about that. So if we're doing this, same 60 cents, 17 divided by your 60 cents in EPS this year, it's a 28.33, and your growth rate is about a 33% growth rate as well. So it's now under a 1 peg. It's always been under a 1 peg. It's just now it's a bit more attractive right there. A lot of people look at SOFI in terms of price to book, and if you view it that way, it's much more expensive than all the other banks on the block, but then none of them are growing at these rates either. So is it a decent price for SOFI? I do think so, but are we going to hit the all-time highs this year? Ooh, very debatable, guys. I doubt it, but if you have a long-term view on SOFI, probably a decent time to be averaging into the position if you are of the opinion that it is going to be a fast-growing company in the future as well. Moving into Uber right now. Uber up 1.66%, but similar to so many other names, guys, the price action is just so soft right now on Uber, unfortunately. So the bulls have been trying for something. They sold off the NVIDIA gap, unfortunately, right? And we're just oscillating around these lows. So nothing substantial here has changed on the price action to give me the indication that the bulls want to play ball. I mean, Palantir should be your benchmark, right? This is sustained price action. This is just too soft. So when the price action is too soft like that, no short-term call options for Uber on me or on Uber from me. And that being said, if we do move a little bit lower, you guys know how I'm playing this one. Talk about it in the top 5 videos every single Sunday, right? Come down to low 70s with the high VIX. I'll be selling puts down here closer to the 200 weekly EMA in the mid 60s overall. At 75 though, I am adding every time that we're close to the low 70s. And even if we make our way to the 60s, guys, this is a pocket that I'm adding shares to the long term, right? I hadn't added to Uber for a very long time. Didn't add at all up here. But if we come down back to here where the valuation starts to be quite a no-brainer in my humble opinion, right? From here all the way down to mid 60s pocket, decent as you're just still in monthly consolidation. And that's a big area. I don't think the bears have it in them to breach this location down there. So I am trying to participate in nibbling on a bit of shares. And lastly, but not least, TSM. TSM up 3%, but still the context of a daily downtrend as well. Bears still in short-term control. To change that, give me the trend change, and only then can we say, great, our weekly lows are set. We might be looking to make an extra upswing higher. Until that time comes, still in weekly consolidation and still also in a bit of monthly consolidation. Best for me on TSM is down here like 300 bucks. Give me 300 while the 12 EMA curls up like this in the context of this beautiful expansion with all of this guidance. And I probably will participate by buying some longer duration shares and even starting to replay the wheel, because I haven't sold puts on TSM in so long. But now we might be getting an opportunity soon in the next week or so, right? And if that does present itself, I will definitely be taking it on good old Taiwan Semiconductor at 340, where we are roughly right now. The valuation is fair, so take another 10% off of this one. Imagine, right? You take another 10% off of this, it's like low 20s multiple, very close to a 1 peg. That's when I start getting really interested, where the valuation and the technicals line up at the same time. That's everything I had for you guys in terms of the overall market rundowns. Hopefully you enjoyed. Now, let's get into the biggest gainers and losers of the day. All right, so just looking at our list right here, we'll start it off with good old, we'll start off Bloom Energy. I'm pretty sure you guys are more curious about that than Estee Lauder, right? So Bloom Energy still holding support right now, 143 down to 127. This is a very nice area of consolidation overall. Daily and weekly charts do show that too. Still riding this 12 EMA, haven't lost it for a very long time, but if we're trading with a stop loss, kind of has to be below this support box right there, because you don't want to be unwound here going for the monthly consolidation. This would be a beautiful, monstrous entry location for Bloom. I'm not sure if we're going to get it. So possible DCAs, right? If we're looking to get into Bloom, there might be your best bets if you're looking to carry this one higher, or you already have the position. Let's say, right, just some indications of some clear stop loss levels overall if you're looking to trade it. FICO coming down another 5.7%. This one continues to sell off in a big fashion. They're going for the quarterly retracement, guys. It's off so much from the all-time highs. However, do they still have the same pricing power that they once had? Nobody's doubting this is a very solid company, great free cash flows, great margins. However, now they have to compete with the Vantage Score, with Equifax, and with TransUnion. And by the way, those companies aren't even faring any better right now. So FICO, for the long term, I have no doubts in my mind that this company can still perform well, but it's still not cheap, right? The problem with FICO is that it was just so expensive for so long, and now the multiples are kind of just normalizing. So nibbling on the way down, if it's your style of company, probably the best course of action, but this should only be taken, right, if you have a very long-term time horizon for this high-quality compounding company, because there's definitely no swing trades that are open right now, despite being oversold conditions, despite being weekly oversold conditions as well. There's just not much price action here. We just lost the most recent level from 2023, so remains out of favor, and a lot of financial segment also still remains out of favor. Moving on to something like a Micron here. So Micron coming down as well, 4.39% after beautiful earnings. Micron just into weekly consolidation. We will see how it responds down here at about the high 300s location. They haven't lost a 12, nor have they lost the weekly uptrend in a very long time. This is possibly going to be an area for me also to position as well, with a slight stop loss down below there, just going for the weekly back test here and possibly going for the launch. And if not, if they do unwind and go for the larger monthly consolidation, well, at least we are positioned with a stop loss. It's the exact same trade as gold. The exact same trade as gold, right? We're counting on the daily and weekly bulls to push this one higher, but we know we're extended on the monthly time frame, so you do not want to sit around and absorb this if it does happen. Nobody's doubting that Micron had beautiful earnings and that the RAM cycle is probably not as cyclical as people think it is, right? So that being said, right now, forward price earnings, very cheap on that one. And even EWY for our Korea names, right? Korea also giving you a location, clearly defined stop loss location. It's right down below here, these lows, about 120, right? The daily bulls are trying to put in some work. This is like 46% SK Hynix and Samsung. They're trying to go for the breakout. However, if it fails and you roll this over and you lose a weekly 12 EMA, something you haven't lost, just like Micron, right? Just like SanDisk as well, although SanDisk is holding up a lot better, right? If you haven't lost the weekly in so long, it's like gold. All these trades are the same, right? They're different assets, but the price action is the same. When you maintain a regime of price action for so long, and then you lose it, sometimes you have to go into larger forms of monthly consolidation, which opens up phenomenal opportunities. It's just, do you really want to absorb this if you don't have to, right? It was the same trade as like Iran and those things like last year. You remember this? Massive swing up there, and you didn't want to take dips below the lows when you lost some forms of price action, because then it unwinds very quickly. It was the same as this stuff. It was the same as like NBIS as well, right? You lose the weekly uptrend, big flushes. It's like it takes a while sometimes to establish the new monthly higher lows into the 12 EMA. and then give you the recovery style, right? So it's not saying that these companies are not good. It's just they can't always go up in an absolute straight line after they have been going up in a straight line for months and months and months and months. So keep that in mind. Speaking about NBIS, big fan of selling some put options down here under the $100 mark. This is the meta gap, of course. Or sorry, this is the meta gap up. Now, that being said, the chart is looking pretty good, right? Weekly uptrend, very nice price action structure, big support level down here. So this would be the reload area for any swing trade longs and or possibly looking for some short puts, at least for me. So I'll be looking to play it down there. NBIS, not too bad at all. And I think that's everything that I want to cover to the downside, at least some of the names that are very favorable or very unfavorable right now. So let's move into our list of names that have printed the highs. Fastly and DigitalOcean, man. Crazy moves on these two stocks recently, right? They've been extremely favored right now. Same concepts remain. If you're looking for the pullbacks, just possibly await the pullbacks of the 12 weekly EMAs. Fastly and DigitalOcean are just gone, right? Arguably, Fastly is still somewhat undervalued in relation to forward estimates. However, it's tough to play, right? If you are playing, you got to put some stop losses somewhere, and those are usually the most recent lows under these lows right here, and just go for the daily uptrend continuation cycles right there. If you don't want to play it, perfectly fine, completely up to you. Pagaya, this is one fintech stock that actually did well today. It's up 10%. So this one is good, but this one is good for like long-term accumulation because the market cap is just so low in relation to their forward growth. It's under $1 billion market cap, guys. And I mean, there's nothing fundamentally wrong with the business, right? Price targets from the analyst are all cleanly above the stock, and EPS flipping positive, which is a good thing to see. And revenue, look at all this revenue. Decent, right? And they don't really hold any loans on their books either. So this one is kind of just like a bit of an asymmetric bet to the upside. It's something that when financials, broadly speaking, recover, Pagaya will probably recover more quickly than the rest of the batch, right? So I do have some shares in Pagaya. I mean, it's a $2,000 position of shares for me. So it's not as if it's a heavy position, but just something small that I've been building since the $20 range. It's now 50% off of there. But overall, I think my average cost basis right now is like high 15s or low 16s, somewhere around there. So right on that pocket. I mean, I'm holding this one. I'm looking for it to complete the multi-year thesis, just a very small fintech play as part of a broader segment of asymmetric bets that I have in my tax-free accounts. Moving on further here, AAOI and some of the photonics names, not too bad of a day, man. So this price action, very clean. They're giving you a very nice stop loss location down there below 83. So we know they've consolidated by a decent margin here because they issued an at-the-money offering at around $100. So that being said, just some weekly consolidation. This one still, I mean, the technicals are up there. Let's be honest. I don't know if they're going to come down here to 75. That would be like best location. Come down to like 75 and reverse the trend. And then you might have a beautiful swing trade in motion right now. Some people are just going to go for it, though, at $7 billion and an exit rate of, you know, let's call it $4-5 billion by 2028. Some may still argue that this one is undervalued. And to a certain degree, I would agree. Photonics are going to be very big in the future, whether it's this one, whether it's names like Coherent. Some of these charts are better in terms of they're just more smooth. Coherent, GLW for glass with their Corning with their partnership with Meta. You know, you got other ones like Cian as well, Fabrinet. So a lot of these charts are just very solid, clean uptrends right now. And that's kind of what you're looking for, right? If you're trying to trade momentum and just trade directional bets, you'd rather trade charts that look like this rather than trade a chart that looks like Meta that just leaves you perpetually guessing, right? I mean, you can clearly tell where the money is right now. And where the money is you find charts that look like these or find very smooth charts like these where the money is clearly flowing into. And during this entire Iran conflict, these names haven't even really moved, right? Haven't even really moved that much. If anything, they've just moved down because of some things that they've done on their own internally, right? Moving into Ondas. Ondas has an earning this morning. Beautiful location of support down here, 1050, down about 850. I do own this one as well. That being said, weekly chart looks pretty good, and their earnings presentation was very solid as well. Beautiful release on earnings and increase of guidance. And Ondas is really building a solid network of companies under its banner right now. So this one also something to pay attention to. I'll be honest with you, at $5 billion, it's a little bit stretched. The last time that Ondas really, I could say without a shadow of a doubt, was at a good fair valuation, was down here at like 6. Up here, you're paying a lot for the forward growth. I'm not going to lie, okay? So just pay attention to that. And now moving on to some of the critical minerals plays. So critical minerals, USAR, and some of the other ones, UAMY, et cetera, not looking too bad. You can play these individually or play them under a banner of the a critical minerals ETF like Sprott. This one's come down a lot, right? With the gold and silver moves to the downside. Some of these critical minerals ETFs have silver miners, copper miners, lithium miners, uranium, and also specific critical minerals as well, right? Like antimony and things of that nature. So a lot of people might prefer to take this critical minerals trade under the banner of an ETF, which is perfectly logical. Just remember that if you are buying critical minerals, it has to be done with a multi-year thesis, because a lot of these companies, right, the bulk of the big revenue shift, right, because they're trying to move away from China. Well, the US is trying to move away from China. The bulk of the revenue shift will probably be happening in 2 years, not right away as of right now. So just keep that in mind. It's another core theme that we're kind of looking out for right now. And the same thing can be said about some of your uranium stocks right now. So uranium, a lot of these have come down substantially. Uranium, you guys know my thoughts on it, whether it's playing in an ETF, NUKZ, right? Or some of the larger names like CCJ or Constellation Energy, all can have a good thesis behind them. I'm just here to say that you should probably be keeping uranium on your radar for the next 2, 3, 4 years. A lot of different partnerships with big tech names overall too. And it should be a favored trade for the next 5 to 10 years, arguably, right? Back to kind of a resurgence of nuclear power, not only in North America, but also across the rest of the world. So please keep that in mind. So we covered minerals, we covered uranium, we covered some of the photonics names, I believe. We also covered some of the other smaller names that we talked about too. And I think, just because I can't spend too much time on these, some of the fintech names we're covering, Affirm also, it's exposed to the consumer and obviously being a financials name, right? So some names like Affirm, medium to long-term outlook, fair valuation down here at 46, meaning like I wouldn't mind buying some shares for like longer term durations, like the next couple quarters and like the next couple years, arguably. Very solid, right? It's maybe not a name that I'd be looking to hold forever, but taking it for a larger swing upon the recovery of financials overall, Affirm moves quite quickly. And the same can be said on Nubank. Nubank is one that I have a little bit of shares here in my long-term portfolio, and I will be nibbling a little bit more down here, 14 to 13. They had beautiful earnings, and the valuation down here at about 14 bucks is really fair in my opinion. So taking advantage of this monthly back test right now, pretty advantageous as well. Just while I'm on the topic, right? Grab is also a company that I've been adding to recently in this little $3 pocket right now. Valuation is very fair down here in my opinion. Profitability is no longer a question. It's actually here. All the analyst price targets cleanly above the stock right now. And it's not as if there's 2 analysts, guys. There's 27 people telling you that's probably a buy right now. EPS up and to the right, and revenue, no problems in scaling there as well. They're also putting a bid to acquire Food Panda, which is a pretty big company. So the Grab banner continues to grow across Southeast Asia. So this one's going to be probably, I mean, the price action's been terrible recently. We're not going to lie, right? But I'm holding this one, man. Every time I go to Asia, like I use Grab so much, and I think the valuation is fair down here. So I'll continue to build a position. It's not a very big position for me, by the way. It's like an $8,000 position as part of like a 7-figure portfolio. So not the biggest trade in the batch, but still. And also while we're here, I mean, some solid companies like Mercado Libre, good valuations down here, Booking.com, also adding to my position down here as well. You know, several things like that. So we'll cover more names as we kind of move throughout the week, but I think we've done a good job of covering most of them. I know a lot of people probably want me to talk more about some of the fintech names right here, like Robinhood. Like nobody's doubting Robinhood's growth, right? It's just, it's too tied into the price action of Bitcoin, but also too tied into the consumer and interest rates and things of that nature, right? So although Robinhood's fair down here at 70 bucks, I'm not saying the contrary. It is fair. It's a much more fair valuation than at 140. Should it have gone to 140 to begin with? That is what's actually debatable. But is it a decent buy? Yes, but you shouldn't be buying this one here under the premise that, oh, it's just going to skyrocket recovery like this. No, right? Until financials, broadly speaking, recover, until fintech broadly recovers, and probably even a portion of crypto as well, Robinhood is just probably going to stay a little bit muted. But if you're into it for the long term, maybe that just means a nice phase of accumulation for you. So I think that is everything I had for you guys today. I mean, there's like hundreds of stocks in this list. I can't possibly cover them all, but I'll try to give you guys on a daily basis, right, some of the plays that I'm either interested in and what I'm looking for in them. So that's everything I got for you. Futures market down today, so we'll see, man. The moral of the story from today's video is basically, can we be playing these current markets in this environment? Yes, 2 ways. If we're a long-term portfolio investor, clearly there are many high-quality companies trading at very low valuations that we should be nibbling in these times because of these statistics that we've been showing you guys as well. But if you're trading the markets, right, directionally, you probably should be focusing on some of the names that have extremely clean uptrend charts where the money is clearly focused on, right? Energy plays, drone and military plays, photonics and data center connectivity plays, right? Various forms of AI as well. That's where the money is flowing into right now. Let's be honest, right? If you're trying to time the bottom for short-term call options on Nike or something like that, it may not be the best time, right? The chart's kind of down. I mean, you could take a contrarian bet on some of these guys. I'm just here to say, right? So many of these plays just won't go up until the broad market goes up. As opposed to some names don't need the broad market to go up and they just continuously go up, right? There's always a bull market somewhere and it's your job to find it, especially if you're trading in the markets, right? So keep that in mind. Now, that's it for me today, guys. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these videos every Monday to Friday in preparation for the upcoming days of the week. And last but not least, if you have any questions, please feel free to leave them down below in the comment section. Any questions you may have or any plays that you are personally looking at, we'd love to hear from you down below in the comment section. So keep that in mind. And last but not least, in the event that you guys were tired of trading and investing in the markets all by yourselves and you wanted to do so as part of a group, well, you may consider joining our trading and investing community. The link to join us is down below in the video description. In the group, you get access to a few different things. All of my trades in real time, whether short-term swing trades or some of the small cap names that we've been getting into this year and crushing it on, the wheel trades, so selling options in the current market environment, very popular. A lot of our members have just been crushing it recently with the volatility. So whether it's the wheel trades, the leap call option trades, the long-term portfolio trades, the small cap trades, anything that I do, you guys get access to it in real time. Additionally, you get access to our private morning live streams Monday through Friday. Every day, every morning for about 2-3 hours at the open. We trade live, and then I take all your questions on your stocks or options or long-term portfolios. The best place to ask me questions. You get access to over 15 hours of private education content that I will never put on YouTube. And additionally, you also get access to all my charts. So whenever you see, support resistance areas like this and fundamental breakdowns like this, if you guys just wanted to copy all my watch lists and all my charts, they are yours just as an added bonus. It takes 15 seconds. You just copy paste all of them in TradingView. It's super simple. So all of that and much more, if you wanted to join us and step up your game a little bit and trade and invest as part of a broader community, we'd be glad to have you in there. Link to join us is down below in the video description. Hopefully I get to see a few more of you guys in there soon. And if not, I'll see you right back here on the channel. That's it for me. Have a good rest of your evening. Have a good day in the markets tomorrow. Peace.